I think silver's going to be really interesting this time around because previously when silver has had its moment in the sun, it's generally followed gold, and it's more speculative. We understand that the industrial uses of it waver over time, they vary over time, and the end of silver as an industrial metal has been called more times than I can imagine, but that's simply not the case. But what's going to be interesting this time is when money starts to move into silver, to have a supposedly safe haven asset in silver that is also incredibly risky, incredibly volatile. I think you're going to see an awful lot of money that was in crypto and in NFTs once they see silver moving. And you can make the case that by buying silver, I'm being more prudent, but look at the vol. I think you're going to see some truly extraordinary things happen in silver because
Grant Williams, one of the most respected macro thinkers of our time, just dropped a jaw-dropping warning about silver. And trust me, you'll want to hear this. He says this time, silver won't just follow gold. It could unleash fireworks, driven not just by cautious investors, but by a tidal wave of pure speculative money. Think about it. Crypto gamblers, NFT chasers, meme stock traders, all that risk-craving capital could come rushing into silver the moment it starts to move. And with vault holdings already razor-thin, Grant believes the setup is unlike anything we've ever seen before. In his own words, the ride could be glorious, but it won't end quietly. So stay tuned, because what Grant Williams is predicting for silver could shock the markets and rewrite the playbook for precious metals.
Yeah, I think all of the above, Andy, to be honest with you. I do. And that sounds strange with gold nudging $3,700, when a lot of people were talking in not too distant memory about it wouldn't get through 2,000, or once it did, it was going back to 1,300. We're nudging 4,000 now, and it's got there very quickly, and it's certainly garnered some attention from people who weren't paying attention before. But at the end of the day, gold's a curious thing because there are long periods of time where nobody really needs to own gold. You don't need to own it. It's never a bad thing to own, but there are periods of time when everything's calm, when you can invest your capital in more risky places with a lot more comfort than you can right now, perhaps. And so between 1999, let's call it, and 2005, nobody needed any gold. Between 1980, when inflation peaked, and 1999, nobody needed any gold, and the price reflected that. It went from $800 to $250 odd dollars. Nobody wanted to own it. But since the turn of the century, and since it became pretty clear that the path forward for just about every central bank in the world was going to be currency debasement, gold is something that it has made an awful lot of sense to own. Now, that hasn't meant a lot of people have owned it, because at the same time stocks and shares are going up, and that's what was in the news, and that's what was on CNBC, and that's what their friends were talking about when they were telling them to buy Cisco and Intel and all these cool shares that were going up. Your bond portfolio did well, real estate was doing well, everything was doing well, and so no one really needed to focus on gold, except the people who either perhaps spent more time looking at monetary systems in general, spent more time perhaps studying Austrian economics, spent more time understanding the reason that things were going up was not necessarily because everything was great and business was booming and the markets were representing economic reality, but the fact that what they were really representing was this currency debasement. And you can see it in share prices, you can see it in asset prices, and it's being reflected in gold. But everybody understands buying houses, everybody understands buying shares, everybody understands buying bond funds. Buying gold is just that little bit of extra work. It's a little bit more complicated, and when you don't need to complicate things, people don't do it. And so that's why in the West particularly, there's a massive under-owning of gold right now, I think, and that's why you're starting to see the price move as it is, because people are trying to play catch up. It's different in the West, in the East, as you well know. Gold is much more of a way of life there. It's much more of a familiar asset to own. And so we're in that period now where investors in the West are looking at what's happening. The penny's starting to drop, and they realize that gold is, if not the solution to this, then certainly one of the primary solutions to this. And people are starting to adjust accordingly. And I personally think that the fun and games in gold, and particularly silver, is really just getting started, because people are still trading it. Once we get to the phase where people realize that they have to own it, things change dramatically, because when people want to own it, it's not for sale. And that could lead to some real interesting moves. Well, I think silver is going to be really interesting this time around, because previously, when silver has had its moment in the sun, it's generally followed gold, and it's more speculative. We understand that the industrial uses of it waver over time, they vary over time, and the end of silver as an industrial metal has been called more times than I can imagine, but that's simply not the case. But what's going to be interesting this time is when money starts to move into silver. The money that moves into gold is generally speaking cautious money. Yes, there is some speculative froth in gold. Yes, there are people who see the momentum it has and are trading the momentum. I get that. But generally speaking, when money moves into silver, it's more risk tolerant. Let's put it that way. And because of what's happening right now and what has happened for the last 10 years, you've had this extraordinary explosion of appetite for risk because of the way central banks have managed markets, managed interest rates to provide that safety net every time markets look like they're going to fall. People are much more comfortable taking risk. And in fact, because of the advent of crypto and NFTs and all the kind of highly, highly speculative stuff, you have an entire generation of investors who crave the most risky thing they can possibly find. And we can talk about it being this idea of financial nihilism, where they don't believe unless they get the 100 bagger that they're ever going to get the ability to buy a house or start a family, or all those things, which, I understand those feelings. But the money that's going into gold traditionally is money that's coming out of equities. It's people that are nervous about equity markets. So to have a supposedly safe haven asset in silver that is also incredibly risky, incredibly volatile, I think you're going to see an awful lot of money that was in crypto and in NFTs and in AMC and all this ape money and all the stuff that's buying the double leveraged ETFs. Once they see silver moving, and you can make the case that by buying silver, I'm being more prudent, but look at the vol, I think you're going to see some truly extraordinary things happen in silver, because the kind of money that's going to go into it is going to be the kind of money that just craves that risk and will chase it to who knows where. I mean, Andy, I hate to interrupt, but it's not the massive investor money that's going to drive it. It's the massive speculator money, and I want to make the differentiation between those two things. So I think it's really important. People invest in gold for the long term, and yes, there are traders, yes, there are, but silver is such a speculative asset. It's going to pull in an enormous amount of purely speculative capital, and once we start seeing, the double long silver ETF get launched, which we will, and the triple long silver ETF get launched, which we will, then I think you're going to really see some things happen. I mean, ultimately it will end in tears, but for the time being, it's going to be a glorious ride for the people who are willing to strap themselves in and enjoy it.
So would you think that massive speculation by the younger group would be more symbolic of the end of the fourth turning or the beginning of the first?
I think, and it's much more the former, because at the beginning of a first turning, you're rebuilding from the rubble of the fourth turning. And so, I think as the speculative capital flows in, it is the end, the blow off top, if you will, of this speculative bubble, of this fourth turning. It's the money chasing those crazy returns that they're promised, just as the economic reality is starting to run on fumes. So I think there will be an immense crash. We don't know when it's going to come. We don't know the nature. We don't know what's going to trigger it. but the amount of leverage in the system, the degree of overvaluation, and the pure speculative fervor that's in there, and that speculative money is always very skittish when you get to the end, and it can lead to all kinds of crazy outcomes. But this is the end of the fourth turning, or the build up to the end of the fourth turning. The first turning will be people not wanting to own a single share, not wanting to own a single bond, wanting to have the cash in the bank, wanting to own gold, and speculation will be a four-letter word. So that's what you can expect once the fourth turning's over and the first turning's begun. But from there, it's all upward. So the sooner we get there, the better, frankly.
If Grant Williams is right, silver's next run won't just be another rally. It could be the wildest ride in the markets. The only question is, will you be strapped in when it takes off? If this insight opened your eyes, don't just click away. Hit that like button, share this video with others who need to see what's coming, and make sure you subscribe and tap the bell icon so you don't miss the next big update. Because when silver starts moving, every second and every insight will matter.